Hey everyone, welcome back to Talking Success. Very special episode today. I was just saying to our guest that it was a year and 4 months ago since we last spoke. Well, since we last recorded an episode on Talking Success, and it gives me great pleasure to have Trevor back on. Momentous kind of year for Lula. For those that sort of follow the business and maybe follow some of the social media. 10th year. We were just debating whether you can still be classified yourself as a startup after 10 years. I think you probably can. But Trevor, listen, great to have you back on. Thanks so much for joining. I imagine it's pretty hectic with not just celebrations, but sort of scaling the business and putting in place everything that you've put in place and kind of planning for the next 10 years, I guess.
Yeah, spot on. I think, when you get into it, you think, 10 years in, everything should be running smoothly. It's it's definitely not the case. It still feels like, every day, obviously there's areas of the business that have matured, but yeah, there's still so much on the go and things that are trying to fix and fires you're trying to put out to take that next step in growth and that sort of thing. But no, it keeps us all young and it's still exciting, and that's the main thing, I suppose.
Well, look, I'm not going to go back on the previous 10 years, and we might touch on a couple of points. Because I think if anyone wants to know the story, then please listen to the first podcast we recorded, because I think that goes into the why and the how, and really what kind of Lula evolved to, and the various different partnerships that kind of not exploded, that's the wrong word, but took Lula to new heights. I'd really like to talk about kind of the next, maybe not 10 years, because I don't think anyone can wind forward that far, but let's have a look at how the landscape's changed, perhaps, sort of SME financing. Maybe I'm jumping ahead a little bit. We should probably do a very quick intro. There's lots of people that tune into this podcast from overseas, and they may not have heard of Lula, understandably. So do you want to give a very quick kind of high-level overview, what the business is, who you serve, and then we can get onto some of the details about market dynamics and kind of looking ahead.
Cool. Yeah, maybe just to break the business down into three understandable parts, and it's how we went across our journey. So it's first, Lula directly lending to SMEs. So our world is just SMEs, and we're focused on funding them. But that was our first product in market, helping or getting quick, easy digital access to finance for SMEs. The second component to our business is our partnerships. So we, had built up all this technology. So we met with a number of potential partners who have SME networks, the likes of Yoko, Vodacom, HelloPay, payment gateways and other type of businesses where they have data on their customers. They service a sizable SME base, and they actually looking to support their customers with credit. So partnerships is that second component of our business that we started building up around 2019, 2020. And then the most recent part of our business, the third side of things, is our banking capabilities. So, and that really talks to our vision for the future and where we're headed, but not just being a digital lender, but actually owning transactional banking and banking end to end for our businesses has been our sort of latest focus.
Given we are sort of in the banking realm, and we're sort of in the world of kind of compliance and regulatory controls, I probably should disclose that our business is a customer of Lula's, and we've had a fantastic service and thoroughly enjoyed working with you and your team. Not you specifically, but your team. Although I do enjoy talking to you, so that's kind of I suppose I probably need to get that in there as well for compliance sake. But let's just talk about the third part of that first, if I may, the banking side, because I think when we first spoke, again, a sort of year and a half ago, you described Lula, and forgive me if I'm sort of misquoting you here, but not a bank, but a fintech offering banking services. Is that still the case? Has that changed? Is that going to change? What, you able to shed some light on that?
Yeah, so we don't hold our own banking license. That's the premise to all of that. So we are what you would call neobanking. So neobanking being the new entrants that have come into market here or internationally, that they don't actually hold a banking license, and they're utilizing the license of a sponsor to help support their go-to-market strategy. versus your challenger banks, the new guys coming in that actually hold a license.
Yeah.
The major differences for us is that we don't own customer deposits. Ultimately, that actually the oversight of those customer deposits is with the sponsor bank. They have that regulatory and compliance oversight of that, and they have the regulatory and compliance oversight of us as a business. So it's a far lighter weight for that enabled us to get to market, where we could partner with, in our case, Access Bank, where they have the infrastructure available for us, so the real back end functionality that we're able to leverage, and then they obviously bring the oversight. What that empowers us, though, is to focus on that front end customer experience layer. So everything from your onboarding to your day-to-day interaction with your bank account, that's everything that Lula's built, and that whole experience layer, and then allows us to embed products like our credit and funding product that sits within the application, the cash flow management products, and all that sort of thing. So we're able to focus our attention on that layer, and so it's a far lighter weight way for us, or that we've used to get to market.
And you mentioned a couple of the products. How's the product roadmap changed over the last maybe 2 or 3 years? And then what does that look like moving forward? Because you kind of alluded to something there, but so I'll use the fintech term and I'll double click on that. So can you elaborate a little bit?
Yeah, so if we look at it from a credit standpoint, let's look at it from if you're opening up a bank account, maybe that's the cleanest way to look at it. What was critical for us was that you didn't have two separate experiences, that it wasn't a case of you open up a bank account, and if you wanted to access credit through Lula, you had to go through a different journey and wind up on a different system, or whatever the case may be. Is we wanted it all integrated in the same spot. So you go along that journey, open up a bank account, you utilize the bank account, you're able to immediately leverage that data to be able to access credit directly in that platform. Same with your cash flow management tools that sit across. As long as you're interacting with the bank account and you're running your transactions through the account, you're able to view your analysis on your transaction history and that sort of thing. Important products that I think when we spoke the last time that we hadn't brought to market, but super important as a company that's fundamentally focused on SMEs and servicing SMEs, was bringing a multi-company opportunity to market, meaning that if a business owner runs multiple businesses, they can log into a Lula platform in one place, and they can access all their business accounts from one login. So incredibly helpful for a lot of business owners who generally hold or have more than one company that they're operating. Another important feature that we had to get live was our make a checker, or however you want to park and pay type functionality, where businesses that have grown and they have maybe an accountant that's processing a payment, but the business owner, or whatever the case would be, is the one who's ultimately going to do the approval at the end of the day, making sure that functionality is in place there. So those are sort of critical products that we needed in place to be able to effectively service the SME base that we're looking after. Going forward from here on, that roadmap is still pretty significant. There's no shortage of opportunities or things that you can look to build for the SME owner. But we're doubling down on what we believe are the biggest pain points. And a lot of that is around workflow automation. So how do we make, we're making finance as easy as possible in terms of transacting on your bank account and accessing funding, but how can we take that a step further with our API integrations into your cloud accounting software, and making sure that as much as possible is automated there to make your life easier. Then we're also looking into payroll type tools and opportunities. So a number of things from there as well that will spin out. But really, again, with still that focus of what are the biggest pain points of SME owners? What do they talk to us about regularly that they want us to work on, and making sure that we're able to deliver there where they're not currently getting it from the incumbents.
And correct me wrong here. Over the last decade, it's been about is it 10 billion rands worth of dispersed loans, 25,000 SME customers. That number's accurate.
Yeah, that would have been earlier this year, probably closer to 12 billion or so at our monthly run rates. Yeah, in the region of 25 to 30,000 SMEs that we've supported thus far.
And I think when you guys first came into them, maybe not first came in 10 years ago, but certainly over the last 3 or 4 years, it was a very niche area, right? Because the only option you really had as an SME was to go to your bank. And well, we don't need to sort of run through that. We covered that in the last episode. But I think what we've seen over the last couple of years is it's become quite competitive. So in SME financing and SME lending, with different products, whether it be invoice discounting, whether it be factoring, whether it be sort of balance sheet loans, how do you guys A, stay relevant, and B, kind of stay ahead of the competition? Because as I said, it's starting to ramp up quite a bit.
Yeah, spot on. I think that was, I mean, we saw it coming, or knew at least that it was going to come, and really that's what pushed us down the road of building out the banking proposition,
Yeah.
and that's really because ultimately we believe we want to build a deeper relationship with our customers. If you're only a lender to your customer, they're only engaging with you once every few months, which means in between that period, there's a lot of opportunity for other businesses to pitch their product and say, "Hey, why don't you consider our service?" Whatever the case may be. Whereas we believe, if you're able to bank that customer and you're dealing with them a whole lot more regularly, and that and they enjoying that customer experience, and not only are you banking them, but you're providing additional insights into their business that they wouldn't be getting elsewhere. Plus, over and above that, you're giving them access to funding that should be more cost effective than a pure lender, because you have more visibility around that business, access to data, you're making better credit decisions. We believe it ticks enough boxes for you to become very relevant in your customer's life, and therefore increase that retention side of things. So that's the retention side of how we've thought about it, and we'll continue to build for SMEs so that we are relevant in their lives, and that relationship's good. But then to your point, a number of new entrants coming into the market. The cost to acquire a purely funded customer is really expensive. In fact, it's 20 times cheaper to acquire a bank customer, to open up a bank account for them. So if you're able to acquire a customer a lot earlier on in their journey and get them onto a banking account, and then instead of waiting for them to apply for funding, you're more proactive in terms of pushing funding offers to them, because again, you've got access to their data. You're developing a far more healthier unit economic breakdown in terms of that customer acquisition pipeline and your cost to service. So I think we're going to continue to see new entrants coming into the market, but it's how do you differentiate yourself and continue to add serious value to your customer to make sure that that they don't think about going to someone else ultimately.
And in terms of the stickiness of the sort of banking side, which I think is kind of what you're alluding to there, at what point do you kind of go, okay, we're a bank or an SME bank versus actually we're a lender, or we're going to offer a full suite of products. We're going to offer payments. We're going to offer international, payments for Forex. We're going to offer direct payments to SARS or, to other municipal accounts. At what point do you go, wow, actually, we're becoming a bank, whether it be neo, challenger, whatever definition you want to use, versus actually we're going to be an SME lender because that's our core focus?
Look, credit will always be core to our business. I think we'll never get away from that, and that's incredibly important. The businesses that we bank, we ultimately want to be able to support them and fund them through their growth journey. So that's always the lens that we look at it through. In terms of, again, the products that we're looking to build, it is again within mind. What is critical for an SME to operate? What do they need? You need to be able to offer them at minimum the basics to be able to be successful. But there are some areas, for instance, in payments where, in South Africa, that's already well developed. We have a number of younger players who have come to market and done a really good job. In those instances, we prefer to partner or, make sure that the customer is still getting the full experience and getting offered everything they need. But it's internally not something that we're going to build out from scratch to compete head on when we believe there's good products in market.
A few minutes ago, you were talking about sort of the credit model. And perhaps you could talk us through how that's evolved, if it has, in terms of decisioning. Has that become, are there different parameters that you can now take into consideration, given the availability of data? We obviously don't quite have an open banking framework, but we have a lot more access, or you have a lot more access to data. What has that done to approval rates over the last maybe year or two, and how do you see things sort of improving thereafter?
Yeah, so I suppose the big thing about a credit model is it never sleeps. I suppose we maybe talk, well, we talk it up a bit more now because, we were using AI 10 years ago through
Yeah,
our machine learning models. And, it's obviously a whole lot more popular to be talking about it now. But no, we continue to use our same logistic regression models to be able to improve and train on our models and existing data to understand performance and make sure we're giving the best loans possible to our customers. And what is critical? It is for us. It is transactional data. Ultimately, that's what we're relying on. It's giving you the picture of a company as it stands today. Not like a bank who's more worried about your financial statements, and that could have happened 6-12 months ago.
sure.
And a lot can change in a small business in a period of months. You can win a contract, you can lose a contract, whatever the case is. But we know, like on a month-to-month basis, a lot can change. So for us, our modeling continues to develop, but what we've really focused on is our ability to monitor our customers so that we can be a whole lot more proactive in understanding where they are in their business cycle, and we can therefore be able, make sure that we're there for them when they need us, and be more proactive in terms of increasing facility limits. So sometimes a yes and a no decision is pretty easy. Where it gets really tricky is around at what value, though. So should you be providing 200,000 Rand to this business? Should you be providing 500,000 or 1 million? That's where it can get a bit tricky. And that's really what we focus a lot of our time and energy on, is understanding the affordability behind the business and making sure that we're making accurate decisions there. So it's not putting too much pressure on the business, but at the same time, they're getting sufficient funds to be able to grow and move in the direction that they want to grow in.
Sorry. Yeah. I was just going to ask you about one element, which is the invoice discounting. And then for those perhaps tuning into this and not sure what that is, it's basically being able to say, look, I've got an invoice for a customer and I want to be able to draw down on that invoice before I collect the funds. Okay, there or thereabouts. That's quite rudimentary, but that's basically what it is. Do you feel that's something that Lula could offer as a product? There are obviously quite a few risks associated with that from your side. Is that something you guys have looked at, modeled, in the pipeline?
Yeah, so it's definitely something we've looked at, we've thought about. If you look at our main cash flow facility product, it's basically a bit of a hybrid of all of those things, because we're taking a lot of transactional data and essentially invoice repayment data into account to determine what the facility limit should be for a customer. However, we look to assess a business end to end, not on a per invoice basis. So rather we say, all right, at this point in time, you've got 10, 15 outstanding invoices, equates to about X amount.
Yeah.
Based on all that analysis, we're comfortable that we're lending to you in the ballpark of X amount, rather than drilling in invoice by invoice. So at this point in time, I think the feedback we get from a lot of our customers is this satisfies their needs more than a pure invoice discounting product, and I think that's what sort of kept us at bay from going directly into offering that.
Mm.
But having said that, we do have a product in market called Lula Pay, where the ability to pay per invoice is more of the focus. And as we develop that product out and its capabilities, there is the opportunity to go down that road. But yeah, not something that we've invested heavily on the build side in at this point in time.
Yeah, it's interesting. I think that's as an SME, some of the other SMEs I've spoken to, I think that is a pain point, right? Is that you may be dealing with X listed business on the JSE or wherever it may be, and you've got an invoice for a significant value. The problem is you're being sent around the procurement and the finance, roller coaster of this one needs signing, and then we need a PO, and then we need this document and that document, and you're sitting there going, listen, I kind of need these funds. But I think, again, from personal experience, what I've seen with Lula, and certainly when we've had conversations with your team, it is more of a holistic look at the business, which I think is very unique. Also, and I just want to talk about this as well in terms of people and culture and how that's evolved over 10 years. Again, I'm not being paid for this podcast, I promise. I've only had great interactions. It's always been super smooth. The workflows all work in terms of the automated part. But, I think when there is a question or, there needs to be some clarity on something, to be able to pick up the phone and actually talk to someone and not getting shoved from department to department is really pleasant. I've got to be honest. You try and do that with perhaps an incumbent operator, and you be sent on a merry-go-round. So kudos to you guys. But in terms of that culture, because I think that is a cultural thing, how has that developed over the last decade, or maybe the last few years, and how have you kept or maintained that?
Yeah, I think it starts with who ultimately you bring into the business from the get go. So we make sure that it's everyone we hire is very purpose driven. That we don't want them just to feel like they're walking into another 9 to 5, 8 to 5, whatever the case may be. Is like, if you're coming into Lula, there's an expectation that there is a whole lot more purpose to what we're doing. And we talk about it a lot, in terms of the impact we're making for SMEs, helping them grow, the job creation, the knock on to GDP benefits, and all that sort of thing. So that's a continuous theme that we continue to push through themes. So I think with that, it becomes very close to home across our teams in terms of what they're waking up for and what they're doing on a daily basis. And so that when they do arrive and they come here, they come with that hunger and the willingness to please the ultimate customer. What we've also looked to embed over and above just the culture element is our actual capabilities. So we've highlighted 4 capabilities that we believe will set us apart from anyone else in market. And one of those is our servicing of customer, and not just the physical interaction or over the phone interaction that you have with the customer, but what's also underpinning a lot of that is setting up our data structures that we're able to effectively support through LLMs and that type of thing. We're able to support and service our customers as effectively as possible through our data. So from 2 sides, I suppose it's making sure that culturally you're hiring the right type of person, but then having clear focus areas in terms of what capabilities you want to execute on, hopefully stronger than anyone else in market, and getting rid of blockers to make sure that nothing gets in your way to get there.
And what about you? What keeps you going?
Um, Good question.
It says reaching for the Red Bull. Oh, no.
No, I think the purpose side of things is significant to me. I don't think I would have spent 10 years in a business if it was just for commercial gains. Well, I know that for a fact. So it needs to be, just for me personally, more meaningful to wake up and know that there is more to this, and we are contributing to a country that we love, to a segment, the SMEs who have a deep passion for. That just, I suppose keeps me energized. And then, obviously being around people internally within the business, really great minds that we've managed to bring into the business, and how they've thought about problems and they come at things differently, and ways I haven't applied my mind. I mean, I love those challenges, and seeing the light here and there, and then having really good investor base is also critical. Like, I can't underplay the investors that we've brought on over the years, and again, very much aligned to us. They are purpose driven investors. It's almost, for me, like the best of both worlds. So it's that venture capital type appetite for growth, which I really enjoy, but it's not just that Silicon Valley type mindset of growth at all costs. It is at, what are the socio-economic benefits that are going to come out of that? And the investors we've brought on board and that have supported us along this journey, who have helped, raise our profile and help develop our strategy has been a big part to me personally enjoying things on a day to day.
Amazing. That's good. That's great to hear. I know a few of your investors, and yeah, I can vouch for them as well. Not that they've given me a few million rand, but anyway, let's let's just talk about your 10th year. What have you guys done to celebrate? I know you released a report, and that's great. That's actually a really good read. But what have you guys done internally to celebrate? Because it is a milestone, right? I mean, we look at, there's been so many casualties, I think, in the world of fintech and lending and payments. Over the last decade, you guys have done more than survive. You've excelled. What have you done to celebrate?
In short, probably not enough. Internally, we've, our marketing team and others around them have done a real good job in terms of bringing it to life internally within the business and having the necessary celebrations. I think for me, again, me personally, my mind might be in year 11, 12 already, and
Yeah,
it's basically being more present and focusing on that, and the achievement, as you say, it is something that we shouldn't take for granted. And I suppose it's, for me, it's been more of a time of reflection. But for the business, it's been it's been such a nice story, and the ability to get morale going is always great. So and free cupcakes and whatever don't don't go off too badly either.
no, I'm sure. But I think you look at it and look at sort of 10 years of tenure. Not to harp on about that, right? There's obviously lots of companies that have a lot older, a lot more established. But I think with the impact you guys have made, and correct me if I'm wrong, but the mission you guys set out with a decade ago is still very much the mission now. And I don't think you may have taken a quite a big bite, but I don't think you've eaten the whole animal. It sounds like there's quite a long way to go in terms of the market, the opportunity, SME growth in South Africa. Do you see a point where Lula may look outside of South Africa? There may be some international options, or you guys focusing domestically?
I think for the short term, to your point, it still feels like we're only scratching the surface. Where we still talk about a 350 billion rand credit gap in the SME space. So in that context, we really are just scratching the surface of the opportunity. With us having decided to go down this banking route and going deep, it really meant that our focus needed to be on South Africa for at least the medium term, and so that'll continue to be the case. We What does make sense for us in terms of going or looking at overseas opportunities is to leverage partnerships. So much like the partners we have here, where we help support their capital capabilities. Our strength is in our ability to model data, understand credit risk, and then everything from there, from making the offer to collections. We can support a number of players in a number of markets to be able to do that, if that's a journey they're going on. So we speak with a few players on the continent and other emerging markets. Nothing has sort of grabbed our attention that we need to double down on it immediately. So that means we've really focused our efforts on South Africa,
Sure.
uh, and will continue to be the case. But I suppose we always have one eye on what's happening in other markets, and can we leverage our capabilities to get into that market fairly effectively and support someone, and that's the road we would go down versus a Lula just establishing itself from scratch in a new space.
Absolutely. Well, Trevor, thank you. I'm not going to say let's not leave it 10 years. Let's not leave it a year and a half. I think it'd be good to kind of see where you guys are at sort of early part of next year and see what sort of products and other services you guys have got to launch. It's been an absolute pleasure. Congratulations again on a decade. No mean feat. So kudos to you and your team. And we're a very happy customer, if that means anything. But
Awesome. No, I appreciate that. That means the world. Thank you. Thank you,
so
Darren. I appreciate the time.
And as I said to everyone, I'm not getting paid for this podcast, so you can take it for what you want. Trevor, thank you. I'll let you get back to trying to shrink that 320 billion rand credit gap, and wish you the very, very best of luck. Thank you again for joining us, and I'll see you hopefully very soon.
Awesome. Thanks, Darren. Take care.
Take care.
Bye.